This is Trent Chapman with Short Sale Genius. This is a follow-up to the video I did yesterday with our Ustream. I did a conference call with my group and also had a few people on Ustream watching it, and got quite a few questions after the call, and I want to answer those today. Got time to sit down, go through them, and pick out the ones that were most relevant. Most of the information, a lot of the questions we got was already in the call, just pieces that people maybe missed. So these are parts that may not have been clear or that weren't in the call itself. So here's the first question from G2 and Lori in Phoenix, Arizona. Do you think that HAFA that was launched this week will truly be adopted by the banking industry, such as B of A, Wells, Citi, Wachovia, and Chase? They are all signed up for HAFA. Now that doesn't mean that they have to use it on every loan. Therefore, in my opinion, it's just more of a good face to put on for the public that yes, we're trying to work with the government. Until they actually throw it out in full force and we can see how many files are actually affected by it, I'm still skeptical, but we'll see. Time will tell. I really think it'll affect maybe 10 to 30% of all the files. 30% is on the high end, but I'm saying 10% is probably more accurate. So I'm not expecting a dramatic change in our industry. Mark in Las Vegas, does the mortgage insurance company have to agree to the terms of HAFA, meaning no seller contribution at closing, in order for HAFA to apply to a transaction? Does HAFA basically eliminate the MI company's ability to subrogate? The MI company has to comply if the servicer is to get their bonus, $1,500. So if the MI company says no, we won't release the liability, we want to go after the person after the short sale is completed, then they will not be allowed to go through the HAFA program. Therefore, the homeowner won't get the $3,000 either to move out of the property. So yeah, Mark, unfortunately, the MI company still has power. It's a good thing as far as I'm concerned, a free economy. We don't want the government coming in and taking over these businesses, but for your position, for your client, yeah, they can't force an MI company to comply with HAFA. This is Patrick in Glendale. How do you find out if a particular short sale falls within the HAFA program? Do you ask the servicer? Actually, yes, the servicer will have a request for short sale that your client will fill out. It'll be sent to them in the mail, or you can request a copy and send it on to them. But most of the time it'll be through the mail sent to your client. So that's how you'll know. You can ask them about it, and they'll be able to tell you yes or no, this does not fall within HAFA. Jane in Long Beach. Do lenders have to participate in HAFA if the second lien holder won't participate? Can the deal go to a normal short sale? If the second lender doesn't release their liability in a property, that, for example, let's say that they get their $3,000 or $6,000 at close of escrow, and they're owed another $100,000 or $70,000, whatever it is, that remaining balance, if that lender says we want to reserve the right to collect on it in the future, be it through a deficiency judgment or be it through a collection agency, if they leave that open-ended, then this file, the short sale, is not HAFA approved. Therefore, the first lender does not get their $1,500, and the first lender doesn't get their percentage of what they're offering to the second, and the homeowner doesn't get to have their $3,000 for moving expenses. So, unfortunately, if the second lien holder doesn't participate, then the whole deal is kicked out of HAFA. Next question here is from Beryl and Everett. You keep saying that under HAFA they don't have to have recourse for deficiency judgments, but can they collect on the deficiency by way of doing a collection? Yeah, I misspoke on yesterday's call. Deficiency judgment is one thing, but they have a deficiency balance that's owed. If that deficiency balance owed and there's open-end liability, meaning when the bank did the sale, they released the lien, but not the liability for the deficiency balance, then that bank can choose to come after you for the collections of that balance or seek a deficiency judgment, depending on the state and how they go about that. But yeah, I did misspeak. So in order for the property to go through HAFA, all lien holders have to release a lien and liability, so they can't go after the homeowner afterwards. Again, that's one of my reasons why many banks will not willingly participate, because it reduces their ability to collect more money in the future. And again, banks are in it for the money, they're not in it for helping people. Sam in West Covina. All non-Fannie or Freddie loans, will they have to adhere to the HAFA program guidelines, or is it still voluntary for the lenders? Meaning, does the second lender have to comply, or can they try and stonewall you for more money? Unfortunately, for you and for your client, no, HAFA is not something that the government can force on all non-government loans. So the Fannie and Freddie loans, As we spoke about yesterday, it's kind of unclear whether they're going to participate or if they're going to have a hybrid or a different version of theirs, because they're not really giving an incentive to Fannie and Freddie, say a monetary incentive, but they might also, through Fannie and Freddie, offer a moving expense of $3,000 for the seller. That's still yet to be seen. But yes, that is correct that they can't force the non-Freddie and non-Fannie loans to use HAFA. That's why you need to understand it is voluntary. So the first lender or the second lender can decide, I don't want to participate, and the whole transaction is a non-HAFA short sale. Dean in Phoenix. I heard that the net number in HAFA is set for 120 days. Is that still the case? I don't know if there's a set number, but based on their guidelines and their program, it looks like the soonest that you could do a short sale, start to finish, like from listing to closing, is probably 2 months. And I'd expect it to be more like 3 or 4 months, because they do have the right to deny a file by setting their net number higher than what they expect to get. Therefore, they don't have to comply with your offer unless your offer was above fair market value. So since the banks have the right to set their minimum net amount, I don't think you'll be seeing too many short sales approved within 30 or 40 days of setting them up. It's still probably going to be about 60 to 90 days for approval and then 30 days to close. And in some cases, like this, your example here, 120 days. The second question from Dean is, the original guidelines for HAFA stated the homeowner must remain current and pay 31% of the gross income. Is that still true? Because you said you had to be delinquent before they could not be delinquent. There's a stipulation, is if you read the documentation within HAFA, and I'll upload those to the website here, Dean, for the members, there's a stipulation that states that the bank has the right to request that the seller maintain payments at 31% of their current gross income. So they might give them like a temporary loan modification per se, and in that case, then yes, they would have to remain current on that modified payment, which is 31% of their gross income. Now, this is not a requirement of HAFA, but it's an optional thing that banks can throw in. The government's giving this as kind of like an incentive for the banks to use HAFA, saying, well, through HAFA, you can charge your clients during the short sale and make them pay that in order to get their $3,000 at the end. I don't see it as a benefit. I don't see many homeowners that will want to do it if they end up paying more than the $3,000 that they're getting back. Some will say, let it foreclose, I don't care. So I don't see that. It's probably not going to be widely used, but again, time will tell, because the banks are the ones that have the option of requiring that payment be made. Last question here before we move on. Sean in Peoria. Is there a list now of banks who are participating in the HAFA program? Yes, if you go to, I'll actually put a link at the bottom of this video here, but if you go to the HAFA program website, there's a link of servicers that have signed up for HAFA. And so it is quite a large list, but again, just because they're on the list doesn't mean that all their loans have to go through HAFA. They still have the right, based on the investor that's backing that servicer's loans, that investor can say, I don't want to do HAFA, and the servicer has no right to dictate otherwise. So it depends on the pooling and servicing agreement with that particular pool of loans or that particular investor. So you won't see that just because a bank's name's on the list that all their loans are now HAFA short sales. So just keep that in mind. Hopefully that was good information for you that had questions. If you have any more questions, feel free to send them to me, or you can comment below, and I'll do my best to answer all your questions regarding HAFA. You can also read HAFA. You can download the Supplemental Directive 0909R, which is the revised version. That came out March 26th. If you're like me, you're analytical, you can go ahead and read that yourself and have all your answers come to you through that versus having to ask me. But I'm open to answering questions as well, so feel free to ask any questions you have.